And welcome to the VSA Capital Tech and Transition Energy podcast on Thursday, December the 1st, the beginning of winter. And you can start opening your advent calendar, Phil.
Hey, get first chocolates out. Excellent. I'm excited.
Well, the only thing is, I think we've had the Santa Rally already, probably. We had it in November where markets actually performed remarkably well. So, but there you go. You never know. Maybe we'll just keep going. Maybe the world feels still pretty bad, but maybe it's all priced in.
It could well be. The Nasdaq was certainly up again last night. We'll see what's this. A lot of US data, I think, is expected out today. There's some economic data, but maybe signs that inflation in the States is slowing, and where the US goes, others follow. We'll see.
Well, the trouble is the data around the world is very mixed, isn't it? I mean, in China, obviously, look, this week it's all been about in China the zero COVID protests, but also if you look at their factory gate prices, their PMI, etc. I mean, it looks as though China is going into recession. They won't actually say that; they'll still claim they've got growth. But my guess is they're going into recession. If China, which is the sort of the workhorse of the world, goes into recession, that is going to have an impact around the rest of the world, and actually it will bring back down prices. We've been saying it for ages that actually inflation could turn to deflation. So we're in a fascinating period of time, but it is, I tell you, for equity capital markets, it's tough out there. I don't know if you saw the Peel Hunt results this morning. Quite extraordinary. I mean, they were making tens of millions of profit. Now it's gone to zero. They lost 35 million of cash in the last 6 months. That tells you the state of the equity capital markets, which is a shame, because we also actually, of course, have some really good news about the state of certain equity capital markets. We're going to come to just in a second. But I've got to say, just before we talk about that, it was really sad this morning to see that Christine McVie has died, age 79. Obviously, the one of the major players of Fleetwood Mac. Were you a fan of Fleetwood Mac, Phil?
Yes, I like Fleetwood Mac, and that was sad to see. Yeah.
Anyway, look, just before we get onto the news, and it's been a relatively quiet week for news, but we did on Tuesday hold our Aquis Showcase event and Britain's Got Aquis event, and it's pretty amazing, wasn't it, Phil?
Yeah, do you know what it was? I'm sure we talk a bit more detail about it. The number of the companies we had attending and presenting and pitching, in competition. But what I was particularly thrilled to see was the number of people that attended. And we have to say a huge thanks to all of those that came along to support the event.
It was extraordinarily well attended, actually, and people stayed and listened. And of course, we had Sir Robin Saxby, the founder of ARM, talking about the future of technology, where he sees exciting things, etc., discussing whether he thought ARM would ever end up relisted on London or not, and he was pretty sure it probably wouldn't. But it was fascinating, really, just to see where his thoughts, should we say, on being a listed company. He talked quite a bit about cloud computing and security. Has that got out of control, etc. AI chips, you name it. It was I don't know if you picked up any sort of particular thing you felt strongly about from all of that talk, Phil.
Well, do you know what he did say, which is always it's always fairly profound, though quite simple for any business. He said that the key thing is to solve a problem with your technology, and from that sales will come. And ever an important message there from Sir Robin, and a man who knows.
Yeah, that's true. Now, the winner actually was a company called Good Health, which really doesn't fit into Tech or Trans at all, because they're as the name of the company suggests, it's a sort of healthcare company. But we did have presentations from Quantum Exponential, which I thought was fascinating, a sort of a fund looking at quantum investments, quantum physics investments. Super Seed Capital, which obviously a VSA client, looking at seed capital into sort of SaaS investments. We had Good Energy, which makes renewable energy. I thought that was very interesting.
Yep.
Hydrogen Utopia, which takes plastic and turns it into oil. And actually the other one, which I thought would be the winner, it got into the final, was Equipmake.
Yeah, it was. I mean, quickly, Andrew, I'll get on to it quick, mate, but just a little technical correction there. The winner was One Health Group. You said Good Health, but the result is Good Health from the work that they do, but it's One Health Group that won it. Equipmate, yeah, no, delighted to see. Great that they presented. I mean, they have electric motor inverter technology. And what they basically do is that their technology gets retrofitted into buses, and it ends up being a lower cost way to convert buses to become powered by electric, and they're seeing a lot of interest from the bus companies for their tech. But they've got a lot of IP in there, and as I say, they have developed their own electric motors and inverters. These are also being used in early trials for electrified aircraft, and as I alluded to, they're being used in an EV supercar development as well. So quite advanced technology from equipment.
And I thought there were two key questions that were asked them by our panel of expert judges. One was from Judith McKenzie of Downing, who said, are you going to sell out too cheap? She obviously thinks they're going to get bought. And the other one actually was from Andy Bruffett-Schroeder's, our head judge, who said, look, I really like the business model, but, the capital to build it up is huge. Why don't you just go down the license and royalty route, which is obviously how ARM became so successful. Yep. And he actually said, if you went down that route, I'd probably buy a position. So watch out if they do go down that route, because there could be a big buyer coming in.
Okay. Yeah. So it's really, really interesting. And it's nice to see a UK company as well with an international outlook, and they're doing quite a lot of work in South America. I think Brazil, where there's there were huge bus fleets.
Did I actually say Good Health, not One Health? I did mean One Health. I apologise. I was obviously thinking about, Good Energy and getting confused. my fault, my mistake. So what to you in the all those companies? I mean, I've picked out Equipmakers. I thought was, really good presentation. Any that you would mention particularly?
Yeah, look, I thoroughly enjoyed. No, I enjoyed their presentation. I think, I thought the majority were very good. Look, what impressed me the most was the sheer variety of companies that were on Aquis. I like that. Lots of different UK companies succeeding in different areas. I thought that was great to see. And why Aquis is well worth looking at.
And obviously we count Aquis as a technology exchange, and so we do talk about Aquis. And actually, I've had quite a few emails, and we've seen it with the share price movement. Actually, the Aquis PLC, I can tell you, was the top performing stock on Aquis in November, and we've had buyers of it coming in since that event, because people have suddenly gone, my God, this really is an interesting exchange. Talking also, of course, we also had some of our brands company, we do sometimes call this Tech Trans and Brands, also presenting at this event. We had two of them, both Silverwood Brands and S Ventures presenting. Unfortunately, they didn't get through to the final. Maybe it was a tough one for them to do. You got any comments on those?
Yeah, I have, Andrew. It's the first time I've seen you with nail varnish on. Silverwood Brands own Nailbury, which we happen to have quite a bit at home. My wife very likes Nailbury nail varnish, but they also have they look after Balmans, and S Ventures are very well known for the nutrition bars Pulsing, which I'm sure you've seen in a good number of retail outlets. So these are super companies that are developing UK brands.
I thought I looked very nice in my nail varnish, actually, but I'm not sure it's going to catch on.
Right. Well, you were a good sport with that, Andrew. Well done.
I am a good sport, aren't I? Anyway, so it was a fantastic event, the Aquis Showcase event. It looks like we now have to run it every year because it was so well done. It was also really nice to meet at the event some of the listeners to this podcast, actually, to get their comments. But I'm glad that, it was really nice to meet you if you're listening today. Or tomorrow, whenever you do listen, and look forward to seeing you at further events. And on that note, that's pretty sort of the macro picture now painted out. As I say, news is a little bit thin this morning, but actually, why don't we start, Phil? And I hope this won't catch you out, but literally on the screens, just as we sort of logged on to record this, we had a pretty big announcement out of Invinity Energy Systems, didn't we?
Yeah, we did, and you're not catching me out on this, Andrew. Infinity Energy Systems is a client of VSA Capitals. It's a flow battery technology company, And their batteries are used to store energy in the grid. And as we all know, as renewables are growing, grid is more volatile, and you need battery storage to maintain grid stability and also to provide energy when the sun isn't shining, the wind isn't blowing. But they've won an order, from what I see here, of for 15 megawatts of their flow battery technology, 15 megawatt hours. And this is in Taiwan, and it follows an order earlier announced smaller order in Taiwan from a couple of weeks ago. But it's, that's a good scale of order for Invinity. 15 megawatts hours is a big order. Because as I remember their interim results, their total order backlog at the time was about 16.4 megawatt hours. So it gives you a good feel for the scale of this. It's in Taiwan, which is exciting, and it's with Everdura Technology, which is a JV between Everbright Technology and Ronergy Technology Co. in Taiwan. So very exciting for Infinity.
They're like buses; they come along in threes, don't they?
It's well,
yes, they may come along more than threes, but who knows? They did say also they had potentially 255 megawatts of follow-up orders.
Yeah, they did. This announcement is just come out, but it is, it's of a cracking scale and does look exciting. Yeah.
We've had a couple of others in the same sort of space with news today as well, which because it is a tough area, this. But we've also had a little bit of news out of ITM and also AMTE as well. Do you want to comment on them?
Yeah, I mean, firstly on, I guess, AMTE, who are developing sodium-ion battery cells. They're set for specialist markets, but I think these are the smaller cells that go into equipment monitoring markets, medical monitoring, trying to remember, industrial monitoring, but also developing cells for automotive. AMTE, so the ticker is AMTE. And they had their final results. Their turnover was up as a small company, but developing turnover was up by 12% to 2.2 million, costing lots of money to develop the technology. And their adjusted EBITDA loss was 6.2 million, and they had cash left of just 0.9 million. But they have raised a 5 million convertible bond facility to provide cash requirements. They've got a new CEO, and they have said in here that they've got a growing pipeline of potential business with opportunities of £240 million across the product range, and they're expecting production in early 2023. So, it takes a long time to develop these battery technologies, costs a lot of money. But at least we're seeing some progress there, and good luck to the new CEO, Alan Hollis, who's joined them to drive it.
Well, Alan, if you listen to this, I'll be honest with you, we have been rather cautious on AMTE because we know how expensive it is to create batteries and get them up and going, and it's a long game, as you say. And we've also always said we'd love to come up to Scotland and visit to see what you've actually got. So if you are listening, Alan, and you want to give us an invite, just invite us up. And then so ITM, a little bit of news there, wasn't there?
Oh yes, ITM Power. Sure, lots of investors know this stock. Ticker is ITM. I think the market capital is 634 million. The share price is down 74% year to date. This has been a painful one for investors, but we talked about ITM Power before. This is electrolyzer technology to produce hydrogen, seen as a fuel of the future. ITM, great expectations, has rocketed up in price, has come down. They had hoped to put in place manufacturing capacity for 5 gigawatts of electrolyzers by 2024, and it's proved difficult to. This is all new technology, lots of IP, but it's proved difficult to ramp up production. And of course, it's been in the middle of a supply storm as well, and so they've had to. They said in September their losses have increased to 46 million pounds, 48 million pounds from 28 million pounds previously, on revenue just 5.6 million. They scaled back their plans, and they've announced that their CEO is moving on. But the new CEO is coming in from Linde. So this is the big industrial Gas Corporation, and so he's joining them very shortly. So we shall see.
Well, he's probably got quite a big task there, hasn't he?
Yes,
Now, it wasn't all bad news today. Well, Infinity wasn't bad news. But did you spot, you may not, I may catch you out on this one, but U Group.
Andrew, you
I
know,
love the
we
silence.
can't like have a week go by where I've
Uh,
picked up loads, but might have missed one.
So U Group, actually, I mean, I've been talking to a few people about it. It's it's an independent, I suppose,
Utility.
power SME. You know, actually, it supplies gas, electricity, and water. It's nearly all electric, actually. But they had a little trading update today. Excellent trading performance with full year financial metrics now anticipated to be significantly ahead of market expectations. Those are words we just love. So, but I mean, U Group, it's. I'll tell you what, it's not been an easy one. I can tell you that. It was back down a few years ago at about 50p or something, even lower than that, I think. Back in sort of June 2020. Move forward 2 years from 50p, it's now 375p.
Oh, and it's YU, isn't it?
Yeah, it is. Yeah, been a hell of a stock.
Yeah, well, fantastic. Well, we like that. That is good. Yeah, well.
Well, it's still only a 60 million market cap, so you could argue maybe there's more to go. Who knows?
Well, we'll be following that one.
I probably don't know it well enough. It's not. I can tell you, it's not a widely held stock with institutions. There's virtually no institution in it at all. Anyway, we'll see. Maybe it'll get going. But there's my catch of the day. I caught you out. What do you got, Phil?
I've got lots more, Andrew. You know,
go for it then.
You got to be patient here. Well, this is on a bigger utility. This is SSE.
Ah, yes, they sold off 25% of their transmission business.
Yeah, they go. Yeah, absolutely. Yeah, sold off 25% minority stake in its electricity transmission network, and they have sold it to one of the biggest funds on the planet, Ontario Teachers Pension Fund, which is it is a very big fund indeed. One I've looked at before, and they'd announced in November that they were going to extend their partnering approach on their assets. So this has raised them 1.5 billion. So that was very, very interesting. I also saw this week on environmental funds, a couple of environmental funds announcing. The first one is JLEN, used to be John Lane Environmental, I think, but it's JLEN, abbreviated now. The market cap's about 827 million. The shares are up 18.5% year to date. Environmental fund, this one, Andrew. Share price is 125p, and that's important when looking at funds. So they have their results to 30th of September, and their portfolio was valued at 890 million versus 795 million pounds. And they also, if I go on to my next page, sorry listeners, so their NAV was 125p, which is the share price. So no discount to NAV on this one, which
that's
means
unusual, isn't it? I mean,
yeah.
I thought you'd have come up with about a 20% discount.
Yeah, there you go, sir. And bear in mind that there's been quite a shift around in investment in energy assets this year. So obviously we've had, the tragedy of the war, the hike in energy prices, shifts of, certainly share prices into fossil fuels, and then, back in there, the realization that, look, this could drive renewables to lessen dependency on gas, and then, move into renewables. So there's been quite a shift in the investment climate for renewables this year. Well, it's been dramatic to say the least. Anyway, they went on to say their portfolio is diversified, which makes it interesting as well. So it's 28% wind, 28% waste of bioenergy, 21% anaerobic, 15% solar, and then 5% other. So this is an interesting mix in this one, because normally, it tends to be kind of dominated by wind and solar or storage. So it's quite an interesting mix. But they made a comment which any investor in this space needs to be very aware of, is about the UK government electricity generator levy. And they said that will reduce, they expect this to reduce their NAV because they do have generating assets. So the UK government's putting a levy on generation above a certain price on providers, almost like a windfall tax, as it were. So they've just said on that, and it pays a dividend as well. So yeah, very good. Good set of interesting set of results there, and holding its, as you point out, Andrew, that's holding its price, isn't it?
I'll be honest, it's not a company I know at all. So well spotted.
So JLEN, JLEN. Now another one which will be probably wider known to investors is Impax. Impax Asset Management, the ticker is IPX. 799p share price. They have results to the 30th year ending 30th of September. The shares this year are down 44%, and the last month they're up 17%. So remember, we're talking about this move, and they said it's in their results, and they said that investors, given the Russian gas situation, shifted towards value-orientated stocks, or sort of energies and commodities, and that caused shares in the clean energy efficient markets to suffer. And now they're seeing that, they've seen some of that reversing. They said that the FTSE Environmental Opportunities All Share dropped by 28% in dollars terms between the 1st of January and the 30th of September. So you can see now that the move in the sector and recovery in the sector. They reported, and again, I say this is not bad. They reported assets under management during the year period decreased by 4.1%. 4.1% only, to £35.7 billion, and driven principally by falling markets, negative absolute investment performance. But I mean, 4.1%, given some of the falls we've seen in the market, Andrew, I suggest is nay bad. And they said that as of the end of October, assets under management have recovered to 37.4 billion. So, which was 37.2 in the prior year. 79% of the assets are outside of the UK. It's a broad international base. And then just looking to their business, because obviously I guess they will charge fees for managing their funds, these big funds. They said that their revenue as an organisation increased to £175 million by 23%, and their operating profits up 21%, and pre-tax profit up 59%. So given the market environment, for a big fund manager, that looks pretty good to me, actually.
What's with this Scottish bit, nay bad?
Hey, Andrew, that's because I was brought up in Scotland, and so sometimes it drops in.
Are you really? I didn't know that.
Yeah. I'm a Sassenach by birth, but I did all my schooling up just south of Glasgow.
That explains a lot. I'll say no more. Right. Anything else you want to talk about?
Yeah. Moving on to tech, we've been talking quite a lot about transitional energy and renewables. Cerillion, one that we follow this and commented on Cerillion. So Cerillion, ticker is CER, market cap £343 million. The share price is up 27% year to date. They have full year results for September. What do these guys do? It's a software company, and their software is used in telecommunications for billing, charging, it's used for customer relationship management, and they supply 80 customers across telecoms, but also utilities and financial services, and 45 countries. So a nice, broad spread international company with a good spread of customers. And they have said that they're seeing quite a lot of businesses driven by communication service providers protecting themselves against some of the big hyperscale, huge multinational companies, and are putting all this software in so they can drive more services across their networks and bill for their services. So that's helping drive the business. They get revenues from its software licenses, support and maintenance, and also SaaS. But during a period, importantly, the numbers, their revenue was up by 26% to just under 33 million pounds, and boy did this drive profits. The profits were up by 40% to 11.9 million pounds, which was better than market expectations. The group expects to generate strong cash flows. Net cash was up by 54% to 20.2 million pounds. So sales rising, driving higher profits and strong cash flow. And the board is pleased to propose something we all like, a 30% increase in the final dividend, 6.5p per share. Good positive outlook, seeing business driven by investment in 5G and fiber optics rollouts. So that all looks pretty good to me.
Yep, very British. Love a good dividend, even out of tech. There you go. Anything else?
GB Group.
Oh yeah, a bit of GB Group. My mother's got that in her IHT portfolio.
Not had such a good time, Andrew.
No, I know. I'm in a bad books at the moment.
You should have to go and stand in the corner for a little bit over this one. But anyway, it's curious. It's GBG, 866 million market cap, and the shares are unfortunately down 54% year to date. Anyway, they had interims to September. Look, GB Group, one we've both known for, I think, a long time. It's software, and it's software that they use a lot of very big computer databases from people like Experian, for example, where they are given access to individuals' locations in particular, and also, but more personal information on them, financial information, so that actually, if you're for instance an e-commerce company, and I go and log in and I'm trying to buy something, they can quickly verify, exactly who I am and where I'm located. So very, very important in terms of fraud protection. Did very, very well when the e-commerce markets in particular were booming through COVID. But also benefited from cryptocurrency growth as well. And I guess a lot of that was people setting up new accounts to trade crypto, because you need to check, people's identities to do that. I mean, and they work with a great variety of blue chip companies and governments. Not surprising given their capability in the software and its ability to check people. But yes, they had results, interims, and they were reporting, get this right, they had revenue growth, pro forma revenue growth of 10% to 135 million. Profits were up just 1% to 28 million. Operating profit was actually down from 15 million down to 2.5 million. And also note their net debt increased. Now, they made an acquisition during the period. So, their net debt, they went from 39.5 million of cash to 133 million of net debt. But during the period, they have been cash generative, which is helping them to pay down that debt. And also they were saying, as they've been paying down a considerable amount of that debt, actually, and they're seeing, they saw some currency impact on it as well, because it's dollar debt. So, of course, as exchange rates are varying, as sterling is weakened, the debt on translation goes up, but they are paying that down. So, clearly more difficult circumstances for GB Group, but look, I always look for opportunity, right, in these markets, and when things have been heavily impacted. I mean, nonetheless, I would say that there will be an ongoing need for, obviously, fraud protection. E-commerce will not grow at the rates it did, and particularly through COVID, but on a structural basis, e-commerce will grow ahead. So, the need for this product has not gone away, and it's one that's used by blue chip customers around the world. So probably worth, doing a little bit more analysis and work on. So
just remind me, I mean, GB Group had a bid approach, didn't it? And it turned it down.
Yeah.
And yeah. I mean, that's a bit of a surprise, because when it had the bid approach, it jumped up, almost, towards £7. Here we are at half that price.
Yeah.
where does that leave us then? Well, we'll leave that as an open-ended question, whether a bid comes back again now. Because we've basically done 30 minutes and everyone will be listening will be thinking that's enough, come on, get on with it. And actually did spend a lot of time talking about GB Group there. Even I was starting to nod off. No, that's a lie. No, look, I'll tell you what, also, we can just wrap up. Here we go. We also this week, of course, had England actually in their football get out of the group stage, winning their group. But they slipped in the bookies' pecking order. They were the second favourite at one stage. They're now down to 8-1 behind Brazil, Argentina, France and Spain. So I don't know what you think, Phil. Do you think they can win it?
Well, no, I have in the office sweepstake.
God, you're an analyst. Just say yes or no.
Costa Rica. Oh, look, come on, you've got to back England. But it might be a challenge for them.
That's a fair answer. All right, look, as usual, I hope everyone's enjoyed this. If you've got comments, then do let us know. Any companies you want us to talk about, let us know. We'll talk about them as well. But have a very good week. Thank you.
I look forward to chatting next week, Andrew.